If you think big bank earnings are just a bunch of boring numbers, you gotta rethink that. The reports that just came out, it was like watching a high stakes basketball game. Seriously. You had your clear winner, a huge surprise comeback, and one team that was hyped up to win and just completely dropped the ball. But here's the thing beyond the scoreboard, all these results are telling us one single very clear story: the rules of banking have completely changed.
And this right here, this is the core idea we're going to unpack today. This one sentence from our source material just perfectly captures this massive shift that's happening right now. For the past couple of years, banks had this financial slam dunk, an easy, guaranteed way to score points. Well, that time is officially over.
All right, so what is this NII thing we keep talking about?
It's actually pretty simple. Just think of it like this. It's the profit margin banks make on your money. It's the difference between the interest they earn from stuff like your mortgage and the tiny bit of interest they pay you on your savings account. And for a long, long time, that spread was basically a gold mine for them. But as we're about to see, that mine is starting to run dry.
Okay, first up, let's talk about the biggest bank in America, JPMorgan Chase. And their story is such a fascinating paradox. I mean, they absolutely crushed their earnings, but it was their CEO who was waving the biggest red flag of all. Just look at this number, $16.5 billion in profit in a single quarter. It's an absolutely staggering figure that just shows you how dominant they are. By all accounts, the champagne should have been flowing, right? And here's the big twist. On the very same day they announced that monster profit, they turned around and trimmed their forecast for that core profit engine, their net interest income. The biggest winner on the court is literally telling everyone, hey, this game is about to get a whole lot harder. And I want to be super clear here, this wasn't just a good quarter for them, it was a total Hall of Fame quarter. I mean, look at these numbers. They blew past expectations on revenue and earnings per share, and they saw huge growth in investment banking and trading. Everything was firing on all cylinders, which honestly just makes their warning about NII even more powerful. So here's the real fintech takeaway in all this. JPMorgan is basically signaling that the era of making easy money just by holding on to people's deposits is ending. And for every fintech out there, this is a massive, massive opportunity. Because as the traditional bank's cash machine starts to sputter, that's when fintechs can jump in with better rates, better tech, and better services to win over all those customers. Now, let's shift gears to our second story, Citigroup. Because while JPMorgan was busy warning everyone about the old model failing, Citi's CEO Jane Fraser was out there proving that a new model could win, and win big. Their results were nothing short of a statement. Revenue hit its best level in a decade. Net income surged an unbelievable 42%. They just totally crushed it. And in doing so, they showed a completely different path to success. So how'd they do it? Well, Jane Fraser basically tore up the old playbook and started over. She moved Citi away from relying on that old NII-dependent retail banking model. The new focus? It's all about generating fee income, diversifying their services, and doubling down on their markets and wealth management divisions. And this quote from our source material just nails it. Citi's winning strategy doesn't look like a traditional bank's anymore. It's way leaner, it's more focused on services and fees. Really, it's a fintech playbook. It's just being supercharged with the massive scale of a global banking giant. And that brings us to our final story. And this one's a cautionary tale about what happens when you don't adapt. For years, Wells Fargo was stuck in this regulatory purgatory, and when they finally got out, they discovered the game had completely changed without them. I mean, this timeline really shows you just how long Wells Fargo was on the sidelines. They were hamstrung by this asset cap that was put on them after their whole fake account scandal. They spent years just trying to get back to the starting line. And their latest earnings report, that was supposed to be their big comeback moment. And they missed. After all that time, their very first free quarter fell short of what everyone was expecting. And a key reason why? You guessed it, their net interest income came in lower than anyone anticipated. The very engine they were counting on to power their big comeback just wasn't firing. And here is the brutal lesson from their miss. While Wells Fargo was all tied up with regulators, their customers were quietly moving their money. And they didn't just switch to another big bank, they moved to high-yield savings accounts, to money market funds, to fintech platforms that were offering way better returns. That deposit money isn't just gone for a quarter, it might be gone for good. So,
Let's tie these three very different stories together, because when you put them side by side, you see the one big picture they're all painting for us. This report card really says it all. JPMorgan, they get an A+ on earnings, but a D- on their outlook, telling us the easy money is gone. Citigroup gets an A+ for their turnaround, proving a new Fintech-style playbook already works. And Wells Fargo, they get an F, confirming that customer deposits have already left for that new model, and they are not coming back. You see how it all connects, right? It's a simple three-step story. First, the biggest bank in the game warns us that the old way of making money is fading out. Second, another huge bank proves that a new, more dynamic, fee-driven model is the future. And third, the bank that failed to adapt confirms that customers have already moved to that future. This isn't some temporary trend. It's a permanent, irreversible shift in the world of banking. So we end on this question for you. We've just seen clear evidence that the absolute titans of the financial world are changing their entire playbook just to survive in this new environment. And that leaves just one thing to consider. Is your strategy keeping up?